Hey traders, welcome to Charts and Coffee. Hope everyone's having a peaceful Monday morning. Yes, the markets are closed, but it does not mean that we can't get an edge on the week by preparing a plan of trading, a plan of watch list building, a plan of what we're going to focus on and what events might create some volatility that we can either take advantage of or we need to be aware of. So Monday is a great day. And if you're wondering, Rog, on a bank holiday, how much time are you going to spend taking a look at charts? Probably no more than 30 minutes. For the most part, sans day trading, apart from the very attention required day trading approach where it's, hands on the keyboard and mouse for roughly an hour in the morning. My swing trading life can be managed in about 30 to 60 minutes a day because it's what trends am I looking at? What levels am I going to set alerts for? And then setting the alerts and then, basically waiting for my trading partner, my platform to tell me that it's time to put that trade on. And that can be done anywhere from 30 to 60 minutes, depending on the size of the watch list. All right, the watch list. That's what we want to talk about here. So when we start with any kind of watch list building, when we start with any kind of process, when I am looking at what I want to trade, and by the way, the charts that I'm looking at today, I'm not looking at any kind of hourly or 5-minute time frame, although you will see that, hey, wait a minute, Rog, I thought the markets were closed. I thought the equity markets weren't moving. They are moving. They're just not going to be moving in a way that's going to be, sorry, I was playing with my cat this morning, and clearly he needs to be de-shedded. All right, so that's the great stuff about a Monday morning. Wake up, have a little coffee, play with the cat, come take a look at charts. What a life. All right, so when I'm looking at the S&P, I remember two things. One, yeah, it's open. But two, how many eyes are on this thing? How many eyeballs? How much participation? How much active trading is there? Now, there will be some, because just because the U.S. has a bank holiday does not mean that's something that is going to affect the participation, the volume in other parts of the world. I was keenly aware of that, trading Forex since late 1999. There are only two holidays for Forex, Christmas Day and New Year's Day. Other than that, someone somewhere is trading pretty much Friday, from Sunday afternoon to Friday afternoon. And I still take that more global approach. And some of you might be wondering, yeah, Rog, I hear that Schwab, some of you might have heard Schwab's going to start this 24-hour trading or whatever the hours are. But please remember, the S&P trades 23 hours a day, Sunday evening, and then they close an hour a day until finally closing for the weekend on Friday evening. But it doesn't mean that every hour is equal in terms of attention and volume and volatility and just general participation. So just because something's open, please remember, it doesn't mean that it's active. If we take a look at 7 a.m. in the S&P futures, they're moving and grooving on a typical day. 7 p.m., maybe not so much, right? If we compare, say, 3 p.m. on the S&P futures to 3 a.m., other than likely the wind down of the Asian session and the UK sessions opening up, again, remember, all of these hours are not created equal. And that's risk, gang. A lot of folks are going to start to presume that there's something to do in the markets now that they're open all the time. Please be careful of that. And that brings us right back to understanding some watch list building. It's tough to be a bear if you've been watching Charts and Coffee for any amount of time. If you're getting ready to jump into the immersion that we have starting, then you know that watch list building is absolutely the number one task at hand. And if you want to check out what we've got going on, it starts on Wednesday. So the first workshop that we're going to be diving into starts this Wednesday, not just any old Wednesday, this Wednesday. And I'm mentioning this because a lot of folks ask me, Rog, yeah, I want to get started trading. I don't know where to start. I want to start with some of your tools. I'd like to get them on a good deal, a good sale. That's exactly what all this is. So come Wednesday, I'm not going to mention this anymore. We will have begun. But I want everyone at least to be able to check out the webinar so you'll have a good idea of what you've got in store for you once you dive into this 3-month immersion, which is my trade setups, depending on which package you get, my tools, and of course, these individual weekly bite-sized workshops where we're going to build you as a trader for, this is really this Build-A-Bear. This is Build-A-Trader. What are those habits that are keeping you from growing an account? What are those habits you have to build to grow an account? So check out the webinar, and then you can check out the class there at simplertrading.com/immersion. So, let's imagine it's Wednesday, and I'm going to give you a little taste of what we're looking at. We've persisted on the consistency of the upside. I don't have this chart on the right here for no reason. This is a weekly time frame of the S&P. What on earth is bearish about that? Yes, there are some resistance levels. You can see right there, we've been stuck on this resistance level since mid-December. By the way, we've done that many times before. The underlying structure dictates strategy. Let me explain that and then write it down somewhere. What the underlying market behavior is, the structure. Is it bullish structure, bullish chop, bullish trend? Is it bearish structure, downtrend, bearish chop? What is the trend in the structure? And once you figure that out, now you say to yourself, all right, Raghav, this is a trend. I'm going to buy the dip. It works, right? It's often mocked, but it really works. So I know to buy the dip. But if I don't go structure first and I look at, for example, this daily chart of the S&P and presume it's a trend, it's going to likely bite me because this is not a buy the dip environment. Now, what is? Okay, Rag, let me show you what a buy the dip environment is. What would a buy the dip environment look like, Rag? Really easy. Meta. This is a easy, clean trend. I say easy. I don't mean easy as in trading's easy, but easy to spot. All right, look at the green candles. Those are top tier candles. And if you haven't, wait, let me grab my drawing tools here. What's this episode of Charts and Coffee without drawing tools? All right, so I know that these candles have been, for the most part, persisting in the green for, at this point, a couple of months. So those are top tier candles. All right, the next thing that I'm looking at is the structure. This is known as the multi-structure. The top row is the Momo. The bottom row is the trend. And it's really the trend that I'm after. Do I have a trend here? Absolutely. How specifically can I identify the trend? The 31st was when we completed that transition or organized into a trend. And you can see here it started right on that candle right here. Now, before that, would I be shorting? Is there any reason to be bearish? Bullish candles, some neutral yellow. More bullish candles, some more neutral yellow. If someone told you things were going bullish to neutral, would you short or would you wait for a buy? And I think most would say, Rag, if I had that level of information, I'd wait for a buy. And that's exactly what we have. So that's meta, whether you're looking at oversold buys or whether you're looking at buy the dip. Structure dictates strategy. Here's another place that a lot of traders are starting to get interested in now because it's been a mess. Gang, NVIDIA, Apple, they've been a hot mess for quite some time, right? This is going back to the end of November. Now, why do I say a mess? Look at the candle colors. If you wanted to do anything, would you look at the red candle, which these red candles are far more numerous than the green and the yellow for that matter. So if there is a setup, what would you look for? Look for resistance, right? Look for something that's overbought and buy puts. And that's worked really, really well. Now, as of just most recently, the green candles seem to be emerging. I'm not convinced yet, but the green candles seem to be emerging as a potential opportunity. Now, traders who are, and I'm going to say this really frankly, traders who are trying to take advantage of this, that is a low probability setup. I don't mean that NVIDIA, if you did that here at some point of this rally, that you didn't do okay. But what I mean is if you go and take the next 100 times that you're going to do something like this, pick a bottom. Oh, NVIDIA's got a bottom. If you go do that 100 more times and 100 different symbols, this probability of getting lucky where it's started off very bearish, went neutral, went bullish, that is a low probability setup. We play probabilities, gang. We don't play certainties. The certainty of my being bearish, if I was trading this at all, quite frankly, through this time is far higher a probability for follow through than waiting for a weak stock to become strong again. Same thing goes with Apple, gang. So one thing I remember, one of my mentors said, I had a particularly good year, like a really good year. And I was probably in my mid-20s. I can't remember. But it was very early on in my trading career. And he looked at me and he said, don't confuse an uptrend with brains. Here's the best part, kiddo. And he was right. And I was fuming for a while. But he was right. Don't confuse an uptrend with brains. This is an uptrend. By the way, it's the best kind of trend we could take advantage of. So imagine having an uptrend and some brains, having an uptrend and a plan. And we know that when we have a trend, the probability for higher highs, the probability of continuation in the direction of the trend is far greater. All right, well, when we have red candles come in, I can't be bullish and see red bearish candles. And you can see for a good long while, this was going to favor traders buying puts. Okay, and then this is that same situation in NVIDIA. It's finally started to print green candles again, but this is not in any way a higher probability setup than this. This is what we're looking for. So when traders say, Rog, what about Mag 7? Find the trends. And the worst thing you can do, right? These are the things I'll teach you to avoid. The worst thing you can do is look at something like Google and say, oh, well, it'll bottom out. It might, and eventually it will. But would you rather be a buyer of a trend? Would you rather be a buyer of a stock or an ETF or a futures contract with consistent green candles and an uptrend, or hope that you caught the low? We don't want to do the latter. And that's sadly what most retail traders do. Now, there are some interesting things happening on Google. We have some support here. This is actually a minor low pattern. There are some interesting things happening. But of all the things that we could do, of all the symbols that we can trade, why force trades in things that aren't behaving in a way that tend to grow our account? And we know what growing an account looks like, don't we? Think about anything and everything that you did in 2020. What made that year so great? The uptrends, right? So what if we just take the idea that there's always going to be flow somewhere? There might be fear in one place, but that fear could lead to flow somewhere else. And if that fear is going to lead to flow, this is JP Morgan. Is this a Mag 7? My gosh, people out in television love that. They start talking Mag 7 and what's the new one? Awesome 8 or whatever it is. They find these little catchphrases and it's cute. But at the end of the day, and cute doesn't pay the bills. We want to find trends. So look at JP Morgan. Does JP Morgan look better than NVIDIA or Apple? Yes. How come we're not seeing more discussion about this? Because it's financial television's job to entertain you, right? The job of this thing, I know I'm drawing such an old, that thing's job is to entertain you, right? Our job is to find things with manageable risk, always risk first, gang, and then high probability of follow through. There's no certainty in the game that we play. There's only probability. There's high and there's low. Low probability is your NVIDIA and Apple. Woohoo, we broke out. Versus, look at how long JP Morgan's been continuing. And if right now your process doesn't have this kind of comparison, but everybody's talking about Apple. Well, once upon a time, everyone had mohawks and mullets and wore parachute pants and whatever other trendy thing was out there. We don't do trendy, right? That's just a flash in the pan. It's there to, look all shiny. And then it just fades away because people go, yeah, it's kind of stupid. What we want is classic, right? What we want are things that have worked for 100 years. This is Charles Dow. This is all what I've learned from Dow, that there are 4 market behaviors, and one of them happens to be the best. He called them a markup. They're called uptrends. Same thing. Find those first. And again, if you don't have a process for it, you're absolutely going to love what we do in the mastery and in that immersion coming up. Now, let's take a look at another group of symbols. And Eddie's asking about Dash. All right. So let's do this. Let's jump on over to, I believe that might be in the PBJ group. All right. So what we're looking at here, I'm going to move the clock for a moment. This is the Invesco beverage and food ETF. I know there's a ETF for everything. And you'll see Dash is the number one weighted stock here. And there's a number of uptrending stocks, right? Uptrend, Coke. UNFI, CART, Sprouts, right? So there's 6 names here that should be on our watch list. Not these, gang. So the hardest thing for a lot of traders to let go is, not this. Just because it's cheap doesn't mean it's valuable. In our world, what's value? A trend is valuable, right? We wait for sales on things we like, which is why we love Black Friday. We already have a list of things in the back of our mind that if this valuable thing goes on sale, we want it. Wall Street's the one place they throw a sale and nobody comes. But is this a sale? Is something in a downtrend a sale? And I would say no, this is not going to be a sale when they're red candles and weak. All right, that takes us to the 6 stocks that make the most sense. Now, this is going to be a little bit of preference. This is going to be a little bit of your deciding how you can manage risk. I can't emphasize that enough, gang. I'm talking to you as a trader who's never blown up an account because I'm talking to you as a trader who makes risk the number one thing. Gang, trading is risky. My gosh. Don't blow off those disclaimers. I know it's whatever, but there's a lot of truth in those. Past performance does not indicate future results. Can you imagine if someone told you, hey, this is what I did, and it was a 500% return, and people go, wow, and then they neglect to tell you it was 2020, and now it's 2021, and the macro environment, the accommodation from the Federal Reserve, the trends are a completely different thing. It's true. Past performance does not indicate future results because different market environments have the capacity to grow your account in a different way, grow my account in a different way. But I can say the common denominator is usually trending environment. So our job is to figure out what to trade and then how to manage risk, right? And I'm not going to talk about the sexy stuff like, hey, let's double an account and let's do this and let's go to the beach and whatever else lazy nonsense gets perpetuated out there. I don't know what's happened this year, but when I look at my mastery folks, these are folks that have capital that they can afford to lose. Risk capital. This should not be the grocery money. This is not the money that you keep for keeping the lights on. There's all sorts of great stories about someone. I was reading a story about, what's his name? Fred Smith from FedEx. They're broke. He goes to Vegas. Who's heard that story? Took the last 5,000. That's great. But how many Fred Smiths are we never going to hear about because they blew up, right? So let's not celebrate the folks who took unbelievable risks and got, a little lucky. Hey, I'd rather be lucky than good, but let's face it, most of us have to be good. So let's be really measured in the way that we want to trade. Those are the kind of traders I want to talk to, and I'm getting to the point where I'm so grateful that I get to spend my time in the Sector Secrets Mastery because these are dedicated traders who want to support each other in a positive, non-political, the markets are going to explode and crash environment. We are looking at where our opportunities are, being a second set of eyes, a second set of ears for each other, and trading together, right? Everyone's there to make their own decisions about risk. I teach you the formula of position sizing. I don't tell you like ordering fries at McDonald's, just make this a big position. What does that even mean, right? This is what I mean. Let's start thinking like real traders and not folks who've confused trading in Vegas. And I think that's going to be very much my approach for this year. This is hard enough. We don't have to add all these grandiose expectations of what we can do with our capital. This is not Q1 of last year, gang. Last year, I had triple-digit returns a couple months last year, actually 3 months. I had triple-digit returns. January was one of them. This is a very different January, what we're dealing with right now. It's a very different environment. So my expectations for growth, structure dictates strategy. Structure is also going to dictate expectations, right? And most folks aren't going to talk to you like this because they're too busy telling you how they're going to do whatever they're going to do with their account. Again, trading is hard. It's definitely hard this year. So having a plan, having lessons that will scale for the rest of your career is going to be really important. So going back to Dash, do I want to buy at a high? I don't. I can't manage risk as well up here. Do I love the symbol? Absolutely. Eddie, love the symbol, right? Same thing with Kroger. Love the symbol. But here's the thing. I want a sale. I want to pull back, right? I want to pull back to support. I'm going to spend a certain amount of money either on the shares or on an option. I know a certain percentage of that purchase is going to be at risk. I know that shouldn't exceed a certain amount of my account value, right? Notice how everything is about how do I manage risk, right? And if that's not something that appeals to you, I'm going to tell you two things right now. You're not ever going to grow an account consistently because this game is about managing risk. Don't take my word for it. We've got a day off. Go thumb through Market Wizards. These are the greats, right? These are giants in trading, mostly from the 70s and 80s, right? But these are giants in trading, and they all traded successfully in vastly different ways, completely different ways. Floor traders, systems traders, back office traders, stocks, forex, options, you name it, right? They all agreed on one thing, and this wasn't an interview they did together. They all wandered through the story and then came to one conclusion. Everything is about risk management, and along with that, position sizing, right? And I know those aren't sexy. It's far more sexy to say, this is going, let's get some, or it's far more sexy to talk about, huge trades on 0 days to options XPX. But much like the Fred Smith story in FedEx, nobody talks about the poor founder who went to Vegas with the last $5,000 and didn't win, right? We always look at those, even the Big Short, terrible example for traders, putting on a bravado, big early trade, making billions, letting that become something that traders model. I would never model that, right? Rather be lucky than good, better to be both. And those are things that we need to keep in mind. So buy dash on a dip. Eddie, I would wait for a pullback of at least 50% from the high. From a 50% minor move. So I don't mean 50% of almost 220. What I mean is find the last major move, find a 50% pullback of that last major move. And I would say that'd be easily the low from the 11th of February to whatever ultimately the high is. If we put in a high this week, use that 50%, that'd be a good place to start, right? That would be at least a pullback from which we can control risk. All right, how about FCX? All right, so FCX is in, for the most part, I would look at Freeport-McMoRan as a heavily weighted name in the metals and mining. So this is scanning 101, gang. Notice what I'm not using. I'm not using a scanner. I'm not looking at stocks above their 200. That's a interesting group, but I want stocks that are moving with each other so I can do a true relative performance scan. If you don't know how to do a relative performance scan, never has it been more important in modern markets to understand stocks' relationships to each other based on a common factor. It could be the ETF they're in, it could be the industry they're in, it could be the index they share space in. But we've got to understand that. When I look at Freeport-McMoRan, Elliot, thank you for the question. Metals and mining are absolutely on the move. So I love the sector you're looking at, my friend. However, then a deeper look says, of all the things I could trade, probably not these four, right? Probably not those four. Not that they can't benefit from the rising tide of metals and mining, but because there are other names, Newmont Mining, X, NUE, STLD, there are other stocks that are looking a little bit better. So if that comparative process is, how do I find names that have a better probability, right? Not certainty. There's no certainty in, they call it fishing, not catching, right? There's no certainty in trading other than if I don't manage risk, I'm not going to be playing this game for very long. But the flip side of that is, where is the highest probability of follow through? Let's go with Physics 101. A body in motion tends to, you got it, stay in motion. Find the things that have the probability of continuing to attract a bid, continuing to attract buyers, continuing to attract that bullish sentiment. And we have a better chance at finding something that where we buy it, it'll follow through, right? Feels get us in, but follow through pays us. So I like overall names like X. And by the way, something like NEM is really cool too, because for as much as XME is moving higher, there's another metals sector, GLD. So this one shares space in both. It's obviously heavily weighted in XME and it's heavily weighted in the GLD. So if what we trade is more important than how we trade it, then this would be the way I would compare those names. Not that Freeport-McMoRan may not be able to keep moving higher, but I'm not going to have as optimistic an expectation about it. Now, let it keep printing the green candles. Let it keep, showing me bullish signs of life. And then at some point, it might join the U.S. Steels, the Newmont Minings, the X trades of the world, right? Of that specific place. I kind of like the way we compared. Did I compare financials? When I talked about JP Morgan. This is a great sector to keep an eye on, gang. Here's XLF. Right? Take a look at it. What doesn't look good? Talk about a rising tide lifting most of the boats. And when I say most, the easy thing to do, look how easy it is to say nope, right? Nope, and nope, right? Everything else becomes a question of, is it liquid enough for me to trade the options? And is the budget, the cost of the option within what I can afford to play? That's really it. All right, gang. So I ran a little bit over, but thank you so much for joining me for our bank holiday charts and coffee. I hope everyone has some great things planned away from the screens, but you could see here in the roughly 26 minutes that we've been together, we've looked at 3 different industries, plucked out the relative performers, and it's not a difficult thing as long as you have a process. So I just want to mention, gang, I've never done this workshop thing before. If this is intriguing, if you're thinking, yeah, Rog, this is the missing piece, I think it is for most traders. Having a formula for position sizing, having a formula for risk management, and having a process that's automated for support, resistance, and also figuring out what has the highest probability of following through, which is exactly what we've done here the last 26, 27 minutes. Check it out. I'll see you all tomorrow for Charts and Coffee. Markets will be open. And then we're going to start the workshops this Wednesday. All right, gang. Be good to each other. Have a great day. I'll see you soon.